The Fed holds rates steady and indicates only one cut coming this year. We have a new summary of economic projections that you need to know. First up, Fed officials have, yes, raised their end of 2024 federal funds rate projection from 4.6% to 5.1%, only now pricing in one cut for 2024. But markets are taking this like that's not so bad, because if the Fed's only going to cut one time, then corporate earnings are going to come in good because you're going to have a soft landing or no landing at all, right? That's because the Fed kept their GDP estimate the same for 2024 at 2.1%. They also kept the unemployment rate projection the same at 4.0%, which is exactly where we are at right now. The Fed did raise their PCE inflation projection from 2.4% to 2.6% for this year, and their core PCE inflation target from 2.6% to 2.8% by the end of this year. So better economic activity, stable unemployment, higher inflation, less cuts from the Fed. That's what this dot plot is telling you. For 2025, the Fed is pricing in 4 rate cuts, with the federal funds rate ending the year about 4.1%. They did change their estimate and raised it from last summary of economic projections from 3.9% to 4.1%, so a slight increase there. They did also slightly raise their PCE estimates for next year from 2.2% on both the headline and the core to 2.3% for both of them. Their unemployment rate, they did send higher from 4.1% to a projected 4.2% in 2025, with GDP remaining around 2%. And the Fed did not change any of the numbers besides the unemployment rate for 2026. The unemployment rate projection went from 4.0% to 4.1%. GDP is expected to be 2% unchanged. PCE on the core and the headline unchanged at 2%. And the federal funds rate projection remains unchanged at 3.1%. It's actually interesting, though, because the Fed did change their longer run estimate for the federal funds rate. This is known as the neutral rate. In March, they estimated 2.6% was the longer run rate for the federal funds rate. And now it's at 2.8%, which is not a huge move higher, but it's starting to become impactful. In the last 6 months or so, the Fed has raised their neutral rate estimate from 2.5% to 2.8%. What I also like to look at is the range of Fed officials' dots, right? Specifically for the federal funds rate. You can see back in March, the most dovish Fed official had the lowest dot at 4.4% for the federal funds rate by the end of 2024. The highest dot was 5.4%, implying, you were looking at 3 rate cuts on the most dovish side and no rate cuts on the most hawkish side of the Fed. Well, now that went from 4.4% to 4.9%. So that the most dovish Fed official raised their dot by 50 basis points. That's kind of a big deal. Now, upon initial reactions, it looks unclear if the Fed what really factored in the CPI report with that dot plot, okay? Because when you look at the inflation report from this morning, it was fantastic. Core month over month came in at 0.2%. You were expecting 0.3%, so that was better than expected. Core year over year came in at 3.4%. You were expecting 3.5%, so that's fantastic. Headline inflation month over month came in at 0%. You were expecting 0.1%. And headline year over year came in at 3.3%. You were expecting 3.4%. So literally across the board, all of your inflation data came in better than expected, which is pretty rare for everything on the inflation report to come in better than expected. Now, what's actually fascinating with the Fed and what the markets are pricing in for Fed policy, even for July 31st, the markets are still saying there is a 10.3% chance that the Fed cuts rates, an 89.7% chance the Fed does nothing. For September, the markets are still pricing in that cut September. September has 57.9% odds of a cut, 6.2% odds of 2 cuts, and 35.9% chance of no cuts. For November, you're pricing in a pause or a 50% chance of a continued pause or perhaps the first rate cut. And then December, you're actually pricing in another rate cut, currently with odds of 42.7% and odds of only 1 cut by December at 30.8%. So markets are actually still pricing in 2 cuts this year. They looked at the dot plot today from the Fed and said, yeah, right, not gonna happen. We're still getting 2 rate cuts, which I find that interesting. You guys can see the markets are taking a leap off the top ropes here after Jerome Powell, and I gotta say, I'm a little concerned as well. Now, why am I concerned? Well, it's a problem. We didn't get anything from Powell today. He did not answer anything. He didn't tell us what an unexpected weakening could be in the labor market. He didn't tell us when they might be thinking about cutting rates. He didn't tell us what we would need to think about cutting rates as far as, inflation numbers. Would that be 2 more, 3 more inflation reports? He didn't answer a single question. Like literally did not answer a single question with clarity. He just punted and basically said, we're data dependent. Anything can happen. We'll respond to anything that does happen. And that's it. That is literally it. He just widened kind of the range of what they could do, right? The Fed, from that standpoint. It was interesting. Jerome Powell said that anytime there is major data on a day like today, like CPI on the same day as the Fed officials are allowed to go in and change their dots. And Jerome Powell said maybe some did, maybe some didn't. So the dot plot even today, from that perspective, probably is forecasting or pricing in or showing at least what different Fed officials are thinking now that this inflation report is out. But the thing I am really concerned about, if you guys want my honest opinion here and you don't want me to sugarcoat it for you, Jerome Powell and the Fed, they are absolutely waiting for a deterioration to cut rates. I don't think 3 or 4 or 5 inflation reports that show mild improvement will give the Fed confidence to cut rates. Honestly, I don't think that's what the Fed is looking for here. I think the Fed is still looking for what they were looking for in 2022, and that was real weakening in the economy and the labor market. So I am actually quite concerned that markets are way too rich right now, considering the Fed is actually waiting for some weakening in the labor market and or the economy, and I don't think stocks are priced for that. Now, does that mean you have to see some kind of epic collapse? No, that means I think we're just mispriced, and I think that's partly why you're getting this pretty dramatic sell down after Fed Jerome Powell stopped speaking today, is because I think the markets are coming to the realization that I am as well. You almost have to see a weakening in the economy or the labor market, or rates are not going to fall. And I guess it doesn't help that Fed Jerome Powell just did not answer anything clearly or logically, right? Like literally nothing at all. Never seen Fed Jerome Powell beat around the bush for so long on so many different questions. Like that's a skill that I don't have. I can't do that. Fed Jerome Powell did it today and made it look like art. With that said, we will go ahead and get into all of your Tesla stock news you need to know today, including Cathie Wood that has a new price target out for Tesla for the year 2029. And oh boy, It's shocking. Ark Invest 13 hours ago on X says tomorrow mark your calendars for Ark's new Tesla price target by 2029. Elon Musk commented and said, "I'm curious to read this. The more I think about robotaxis and humanoid robots, the more absurd the valuation becomes." Fast forward to today, 13 hours later, and Ark Invest has released their new Tesla price target. Ark's base Tesla price target is $2,600 for 2029, which would be an $8.3 trillion market cap. They also laid out a $3,100 per share bull case scenario around a $9.9 trillion market cap. Even in a bear case scenario, Ark Invest 2029 price target for Tesla is $2,000 per share. Ark Invest says in this analysis, the probability that Tesla stock could be worth $2,000 per share or less in 2029 is 25%, and the probability that Tesla could be worth $3,100 per share or more in 2029 is 25%. Tesla's stock is up almost 5% today, and well, part of this could be Ark today, and the larger part is CPI. Ark Invest said, quote, "We believe Tesla will launch a robotaxi service within the next 2 years, and that the probability Tesla fails to launch a robotaxi service within 5 years diminishes." Ark Invest said, quote, "We believe that Tesla will launch a robotaxi service within the next 2 years, and that the probability Tesla fails to launch a robotaxi service within 5 years is minimal." So Ark Invest has a 58% chance of a robotaxi launch coming in 2025, a 38% chance in 2026, a 4% chance in 2027, and then that's very, very low numbers for 2028, 2029, and 2030. Ark Invest believes that in an example bull case scenario, Tesla could generate up to $1.35 trillion in revenue in 2029 and have a market cap of $10.9 trillion. That's crazy to think. Even in a bear case scenario 5 years from now in 2029, Ark Invest believes Tesla's market cap will be $7 trillion, reaching $2,000 per share. And I think this did catch a lot of investors off guards today, this analysis from Cathie Wood. Cathie actually raising our price target and putting all of their work out there for the public, heading into the shareholder meeting coming tomorrow. Not a lot of people had that on their radar. And Cathie Wood putting out her price target before such an important event, I think, is also quite bullish. And you can see Tesla stock today had a huge day, and I think tomorrow it's gonna be an even bigger day. Now, Ark Invest estimates that nearly 90% of Tesla's enterprise value and earnings will be attributed to the robotaxi business in 2029. Electric vehicles could approximate a quarter of total sales and 10% of Tesla's earnings potential, as we believe the robotaxi business will have much higher margins. It's almost like comparing Nvidia to Apple. They have roughly the same market caps for both of those companies, but Apple brings in over 4 times as much revenue than Nvidia. Just Nvidia's margins are so much higher that, the valuations are not too far off, even though the revenue is a lot lower at Nvidia than Apple. Meaning that if Tesla can bring in $1 trillion of revenue, anywhere close to that, and have really good margins on that, that will lead to a massive market cap, a massive moat at Tesla. For 2029, Ark Invest is thinking that Tesla may sell 5.8 million cars. In the bull case scenario for 2029, they're looking at Tesla selling 14.4 million cars. Electric vehicle revenue coming in at $250 billion in 2029 on a bear case, and $394 billion on a bull case. Autonomous ride-hailing revenue net in billions On the bear side, coming in at $603 billion. So, I mean, over double the car business, or what the car business could do. That's still a pretty strong number. And in the bull case scenario, you're looking at $951 billion in net ride-hailing revenue. Total gross margin today is 18%. Total gross margin on a bear case scenario, bear case outcome, they actually have this at 56%, which is higher than the bull case outcome at 53%. Total EBITDA margin today is 17% in the bear case and the bull case outcome for 2029. Ark Invest has them both at 32%. Enterprise value to EBITDA today is at 39. 2029 is expected to be 16.8 on the bear case and 18.1 on the bull case. Market cap today, $540 billion. In the bear case outcome, you're looking at $7 trillion. In the bull case outcome, you're looking at $10.9 trillion. I mean, screw the bull case scenario. I'm okay with the bear case scenario. I think anyone else would be okay with the bear case scenario, and Tesla stock goes to $2,000 per share. In other news, the European Union announced they will impose additional tariffs of up to 38.1% on electric vehicles imported from China starting in July. Florida's pension board voted in support of Elon Musk's compensation package, saying the plan exhibits very high levels of pay for performance. They are Tesla's 80th largest shareholder, holding about $800 million worth of Tesla stock. 15 hours ago, Tesla has introduced a Model Y air mattress for $225, literally fitting the shape itself of the interior of the Model Y, which is pretty dang cool just to begin with. But it is a 3-inch high-density foam filling that creates a soft landing pad, and its waterproof polyester exterior is durable and smooth to the touch. The mattress quickly inflates with the included air pump, and within 6 hours, it was sold out. Tesla says they have deployed 2 Optimus bots that are performing tasks in the factory autonomously. General Motors is investing $850 million into Cruise to help cover the company's operational cost. The automaker has lost $8.2 billion on Cruise since 2017, with $3.48 billion lost in 2023 alone. And Elon Musk says that they are just not making the right moves to succeed. Tesla has secured a contract for a $275 million Tesla Megapack battery energy storage system for the Hornsea 3 offshore wind farm in Swardston, UK. The storage system capacity is 600 megawatt hours, equivalent to the daily energy use of about 80,000 UK homes. Bloomberg is reporting, look at this, quote, EV sales are headed for another record year despite the headlines to the contrary. Global EV sales continue to grow and are set to rise about 20% this year. Combustion vehicle sales peaked in 2017 and have no real route back to that peak. Still, sales growth is much slower than past years and some markets have stalled. That's been expected by BNEF for some time, but is also a significant threat to climate targets that governments have put in place. There's no room for complacency. And now, as of about 30 minutes ago, the Model Y air mattress is back in stock. And Elon Musk just responded to Ark Invest and Cathie Wood's Tesla price target for 2029. Elon Musk says it's extremely challenging, but achievable. I mean, if you look at this post by Mario, it pretty much sums it up. It says, Elon, they have been the most accurate predictors of the value of Tesla. Just said that yesterday. Cathie Wood said, we believe that Tesla will launch a robotaxi service within the next 2 years, and that the probability Tesla fails to launch a robotaxi service within 5 years is de minimis. We assume that Optimus will have minimal impact on our price target. Ark's updated open source Tesla model yields an expected value of $2,600 per share in 2029. The bull and bear cases are approximately $3,100 and $2,000 per share. Overall, what a price target. I mean, the timing is just incredible, right before Tesla's shareholder meeting, which takes place tomorrow and will have a dramatic impact on the value of Tesla itself, at least in the very short term. This could cause a massive rally or a pretty massive crash, but we'll talk about that more in the next video. So let me know what you think about all of this information in the next video. We will be going over what I'm expecting for tomorrow, why tomorrow is important with Tesla's shareholder meeting, and everything you need to know along those lines. I highly recommend you guys watch it. And remember, if you have not voted your shares already, go vote. Cost you nothing. It is your right as a Tesla stock investor, and maybe you are the shareholder that decides the fate of Elon's comp package and the fate of all of our Tesla investments. So make sure you go ahead and go vote. That is going to do it for this video. I will see you guys in the next one.